So what's up guys, I am Aso Forex, the liquidity king and the AUD USD sniper trader, and in today's video we're going to be talking about directional bias. Now this is a very important concept for you to make informed decision in the market, and trust me, you need to understand what directional bias simply means in order for you to trade the financial market better and make good profit, right? And what directional bias simply means is you looking through price action and the candles to interpret the future directional move on the market, right? That's simply what it is. So for this, I'll give a little illustration in the board and we'll head on to the chart. Then I will show you a couple examples, right? So for a directional bias, let's assume that we have a market trading up like this, right? We simply know this is an uptrend, and for an uptrend, what does price create? It creates an impulsive move, right, and creates a correctional move. The cycle continue again, an impulsive move, create a correctional move, and it creates an impulsive move, right? So if these are things we know on the chart, then it definitely means that whenever we see price trading, then we can anticipate the next phase of the market, right? So in a trending market, we can see an impulsive move, a correction, an impulsive, a correction, an impulsive. And when we see an correction like this, what we want to ask ourselves is, where would this impulsive move stop for the correction to start coming, right, on the chart? So once we have this, then what we also look out for is we look out for previous price data. So let's assume we have a previous action where price took out the previous high like this, then it simply means that at this point there will possibly be either a push to the downside or a continuation to the upside, right? Now this is how we look at price in order to understand the directional bias. Now let's give another illustration. Now if we have a consolidating market like this, right, then the possibility is that price might likely break to the upside or to the downside, but that is left for the price to either print candles to help us understand. So for this example, if you see a candle break out like this down on the downward side, it potentially means that the market will continue trading down. And if you see a candle breaks above like this, it potentially means it might likely trade up. So candlestick as well is one of the most important aspects that we're going to be looking at in order to make directional bias. These are just the basics. Now let's go advanced, right? Now for the advanced scenario, we'll be using two candle rule for this, right? So let's say we have a bullish candle that opened below and traded above, right, and created a wick. So this is the open price and this is the close price for a bullish candle. And let's say the next candle that opened bearish, so the price traded up, right, and came back and closed something like this. Once you see a candlestick printed like this, took out the previous high on a higher time frame like the weekly or the daily, right, then traded like this and it's in a possible zone, right, let's say it's in a possible zone, that simply means that the market might likely continue trading down, right? So these are the rule of thumb we'll be looking out. Now the things I want you to note for this, how we look at directional bias: first, we'll get a support or resistance level. So firstly, we'll get a support or resistance level, then the second, we'll get a candlestick confirmation, right? So once we get candlestick confirmation, then the last will be higher time frame. Right, so once we have an S&R level, we have a candlestick confirmation, and this all should happen on a higher time frame like the 1 day, the 1 week, or the 1 month, right? These are the time frames that we'll be using for this analogy. Now let's go on to the chart and I'll break it down how you can understand even more better. So I'll see you on the chart. So welcome guys. Now remember we talked about the things that we'll be looking for in order to make decision on directional bias. We talked about time frame, higher time frame, we talk about SNR, and we talk about candles. This should be stick in your head, right? Because these are the things that we're going to be using. So for this example, we're going to be using the GBP GPY, right? We're going to be using Japanese yen and Great British pound. So let's go to the chart and I will show you some of the things that you should be looking out for. So we'll just use this current price data that we have here, from this point to this point, right? This is where we'll be making our decision based on, and I'll show you a couple examples as well, how you can use from higher time frame then scaling down to lower time frame as well. So as you can see, the confluences that we need to look out for, we've identified an uptrend, right, which is here. Market trading up, come back, traded up, pulled back, and traded up. Now if we had this information in mind, we know definitely we are in an uptrend, right? We are in an uptrend on this market, so the market is traded up. So with this information now, we can possibly know how we can trade the market, right? So if this is an uptrend, definitely we know after an impulsive move such as this, there will definitely be a correctional move, right, to the downside. So and we'll be using this price point as our case study to know, since we have this previous price data. Now on the chart, what can we clearly see? After price traded up at this point, we started seeing that the market wasn't willing to trade further up because we had this push, we tried again. So if we saw this first push right here, then definitely it signifies bearish presence, right? But we don't want to be selling immediately because we still need other confirmations, right? So after price traded down from this point, what simply happened again? You can see that price had to go and retest that resistance level, right? After retesting the resistance level, now if our buyers from this point is sell due to how the candle started printed, what do? Now at this point, look at that two candle rules that I mentioned, right? Now let me zoom closely so that you get it. Now we have these two candle rule from here. These two candles are the ones we'll be focusing on. Now what can we see? We saw that price traded above the high of this candle, right? That is our confirmation. Once we see this happening around a resistance level, then we'll go down to lower time frame. On the lower time frame, what are we simply looking for? Possible confirmation, right? And that confirmation on the, now we're on the 4-hour chart, we can simply use the close of this previous candle as our entry, and once the candle close around that zone, you can enter the market. Target a 1:2R. I mostly trade 1:2R, and the market would trade exactly just as you speculated. Understanding that we had an impulsive move and we started seeing rejection or bearish present, then around this resistance zone, then we saw the two candle rule, right, printed on the chart. When we saw the two candle rule, then it's more like the confirmation we need to short, right? Understanding this gives us that directional bias. Remember, the trend gives us impulsive and correctional moves. So when we see the impulsive move happening on the chart, then we definitely know a correction move is about to happen, right? That gives us, and all this happens on higher time frame. Now let's look at other price data to see if we can see the same thing present on the chart. Okay, we can definitely see another one here, right? So I hope you've gotten an idea about directional bias, and if you really want to know more about directional bias, you can join my free Telegram channel. Link is down below the description. There you can also see the broker I trade with, and I recommend my community trading with them. And trust me guys, if you're in my Telegram channel, I share market insight and knowledgeable information that can help you trade the financial market and understand different concepts in the market even more better. And definitely, if I get a good comment in this video, I'll definitely do a part 2 on this topic, because trust me, I just touched the surface of directional bias, not giving all there is to it, right? So if I get a good feedback, then there will definitely be a part 2. And for now, I'm out. I'll see you in the next video. Peace.